The stabilization trend continues here to the Treasure Valley real estate market. Have we officially seen the end of the equity bleeding and the drops in the home prices right here? Inflation is also on a downward trend, as are mortgage interest rates. But will these trends continue, or do we see scarier things right around the corner? Lately, bank runs have happened here in the United States that we're all familiar with, and can the United States lose its reserve currency status in the world? And if that happens, what can happen to the Treasure Valley real estate market and the United States as a whole? Well, welcome to another episode of Mikey's monthly market updates for real estate right here in the Treasure Valley for the month of March of 2023. Please stay tuned to this video because we're going to cover this and so much more, and how the real estate market is going to fare out and how it's currently faring out right here in the Treasure Valley. See you on the other quick side of this little break. Well, welcome back, everybody. Mike Petras here with MPRE Residential, powered by Next Home Treasure Valley, and welcome to another episode of Mikey's monthly market updates for March of 2023. If you are new to my channel, this is going to go ahead and cover what is happening currently in the real estate market right here in the Treasure Valley or greater Boise, Idaho area. And then also we're going to tackle some of the big elephants in the room that we normally hear in everyday news and how this is going to relate to the real estate markets or just the United States as a whole. So I look forward to being your guide, but please also stick around to the end of this video to where I'm going to go ahead and cover the best strategies for you to be able to buy, sell, or invest in real estate in today's current market right here in the Treasure Valley. And of course, if you are looking to buy, sell, or invest in real estate, please feel free to give me a call, shoot me a text, send me an email. More than happy to come up with the best strategy available to be able to go ahead and get you right here to this area. So let's go. Let's go ahead and start off with Ada County. So as mentioned in the beginning of this video, the market correction trends and the stabilization that we've got seems to be continuing, with maybe a little bit of slight difference here in Ada County, but definitely expect it to kind of ping pong from here on out. So let's go ahead and let's take a look at these numbers. We can see that today's median home sales price is sitting at $483,450 for Ada County, which is down 19.7 since the market correction began late May, early June, when the value was sitting at $602,250. So have we seen it come down? Of course, naturally. And if you're watching these videos, you have definitely seen the trends over the month. But we also are down 10.5% since the beginning of January of 2022, when it was sitting at $540,000. But we are up, if we're comparing ourselves from a couple of years ago at April of 2021, really kind of, semi-chopping out the pandemic there, but when it was sitting at 481,208, we're up 0.46% from that time. Looking at this graph at the 6-month overall breakdown of Ada County, you could see that, of course, October, November, December, we're still on the way down, but there we go in January, really kind of putting on those brakes. We went up to 492,115 last month, and then have kind of came back down to 483,450 as we mentioned. And I expect this to really kind of ping pong as we're going along now. But we'll just have to continue to monitor the data and see what is going on and how this progresses in Ada County down the line. But looking at the overall total single family homes in Ada County, we are down 1.76% since last month. Looking at the total single-family home inventory in Ada County, we're actually sitting at 1.44 months worth of inventory. And if we take a look at this graph, we see that it's starting to tick up a little bit. Now, I have mentioned this in the past in prior videos. Do I anticipate like a big spike in inventory that we saw there from January of 2022 all the way to about October of 2022 that you can see according to this graph? No, I really kind of don't see that spike coming this time around. And why? Because mortgage interest rates are on the higher end. So if you're a seller and you're locked into, say, a 3% APR rate, why necessarily would you jump out of that if you don't have to go and make a lateral move and get something at a higher mortgage interest rate? Unless, of course, you're absolutely in a need to be able to do so, like say you had to move for a job or move for family or etc. Hence why I say usher in the days really now of selling for necessity. So do I see the inventory this real estate cycle really bouncing out of control, say like we had right there in that particular peak between January and October of 2022? No, I don't. In fact, actually, if I look all the way back at this graph and look back to January of 2019, I would anticipate this to be the new norm. And as long as inventory and the actual buyer's demand kind of stays relatively intermingled and there's not a huge gap in between, the market correction can expect to stabilize and continue itself out, which I think is going to happen. In fact, looking at the solds here, we can see that the overall solds have been bumping up the last 2 months. So as mortgage applications across the United States, regardless of where the interest rates are at right now. And as long as we see those pendings, which is the orange line, and the blue line, intermingle itself like we saw back in 2019, according to this graph, then what? We can expect stabilization. So now let's go ahead and look at the existing home inventory overall for Ada County. As we can see, the total inventory is sitting at 559. And again, that slight uptick as we're going into Q2, which is basically the seasonal swing of real estate. But again, I don't see that getting out of control in the spike that we saw between really of April of 2022 to, well, really about January of 2023, according to this graph. And the total inventory is sitting at 1.32 months worth of inventory in existing homes. The key here to take away is that that gap between the total inventory and the sales has definitely narrowed. And the more that that gap exists between the overall solds and what we have in inventory, so supply and demand, if it is a big giant gap, we are going to see the market correction that we saw, which we did. And now we can see that inventory has really kind of come down. And if you are looking at $500,000 homes and under, we can actually see that multiple offers are starting to return out here to the Treasure Valley. But with what I just said, will inventory get down to super low levels and buyer's demand rise to super high levels like we saw between, according to this graph, from about April 2020 all the way to July of 2021 when the pandemic was there? No, I don't see that either. I don't see that equity is just going to rise out of the gate because of a lack of inventory that we had back then. More or less, according to this graph, again, I see it more resembling what is going to happen or what did happen between January of 2019 all the way to January of 2020, continuing that stabilization to this market. Looking at the new construction inventory, and according to this graph, we see that the actual inventory on the market is sitting at only 522 homes. And again, the buyer's demand has jumped up. You can see the pendings are coming down, so the solds will kind of come down next month too as well. But again, those numbers are intermingling like we're seeing in some of the other graphs so far, which is just laying out the map to stabilization here in the Treasure Valley. Total inventory sitting at 1.63 months worth of inventory in new construction. So as I always like to play here recently, who really is the biggest loser? Who is the one that ended up affecting the total single family homes the most? Was it existing homes or was it new construction? So looking at this graph and starting out with existing homes, we can see that the median home sales price was sitting at $475 for the month of March of 2023, which is actually up a tick, $3,000 from the $472 that we had the month before. So in existing homes in Ada County, we're actually up 0.63%. But if we do look all the way back at the market correction when it was sitting at $586,750 all the way to the $475 today, we are down 19% overall. And looking at the 515-100 that we had at the beginning of January of 2022 to today, it's actually down 7.76%. Looking at new construction, we can see that the median home sales price was sitting at $503,700, which was down actually a little bit of a significant downfall from the $529,990 that we had before, which was actually down 5% since that last month. Looking at the market correction, which actually really kind of held out a little bit longer overall in Ada County and really didn't start until about June, July-ish at the 690 to the 503,700 we got today, it really came down 27%. So new construction has really been overall affected, but also made that really good jump in even after the market correction had started. But looking back at the 588,945 that we had since the beginning of January of 2022, the market is actually down 14.5%. So really, who was the biggest loser out of the two? Was it existing homes or was it new construction? Well, again, for this month, like last month, new construction is definitely leading that charge. But I do anticipate these numbers to start to ping pong now that the stabilization is here. Looking at the total days on market here for Ada County, and as I kind of anticipate now that we are going into Q2, and especially as the mortgage applications have been up, and you can see that the sales have been going up too overall here in the Treasure Valley, we are now coming back down in the days of market when we were sitting at 74 just back last month to today's 69 days, and continue to expect this number to go down. Now, will we hit levels that we saw, back during the pandemic when we were down to 6 days worth of inventory and a huge buyer's demand with multiple offers? No, I don't see it going down that far, but it will come back down. And looking at cancels and expires, well, surprisingly, the cancels were on the way up in March. And if I was a betting man, I would definitely say that this is because mortgage interest rates actually jumped back up into the sevens late February into March here, just for a little window. And that probably ended up knocking some buyers out of their contracts because it just was a little too much on the mortgage interest rates. So now that mortgage interest rates are on their way back down, though, as inflation is cooling, I can anticipate that the cancels probably to go down. Okay, Canyon County, now it's your turn. Let's go ahead and take a look at your numbers and see what was going on for the month of March of 2023. And as we can see, if we're taking a look at our median home sales price overall over the last few months, look at that. Definitely went sideways. So we're definitely in a stabilization pattern here in Canyon County. In fact, we actually ticked up again a bit from last month, again, sitting at the 395,490 that we were sitting at for March of 2023. And if we're looking at the 476,500, though, that we hit at the peak of the market, which was late May, early June, we are actually down 17% since that market correction. And looking at the 424,900, which was in the beginning of January of 2022, we're down 6.9% from that number. But if we're also looking back at basically April of 2021, really kind of pandemic, time, stuff like that, when we're sitting at 386 overall, we are definitely up from that at the 395,490, which is sitting us up 2.4%, since that time. Looking at the 6-month breakdown, you can really see it here. We were traveling down October, November, December, boom, we put on the brakes, sitting at 390, kind of up to 395, 445, back down to basically 390, and now we're back up. So we are definitely bouncing, and I anticipate this to be the same thing in like new construction over there in Ada County, etc., as we move along. But we are actually up 1.4% since last month in overall total single-family homes in Canyon County. Looking at the total inventory, again, we can see that the amount of solds definitely popped up to 449 and has really kind of been that trend. The pendings are sloping back down, so we can anticipate that number to actually kind of bounce down, I would say, in April's numbers. But the key here is that we're seeing the commingling between the pendings and the actual inventory, which if we look back to 2019, well before the pandemic, and the swing from down to up to where we are today, we're seeing that stabilization pattern come through. But we are sitting at 691 total homes available in Canyon County with 449 sold, which puts us at 1.53 months worth of inventory in total single family. Looking at existing home inventory, we're sitting at 309 available homes with 224 sold. But look at that, boom, huge bump that we had in the total sold. So again, as I mentioned with Ada County, the mortgage applications, regardless of where the interest rates are at, are definitely on the way up on a national level. And we can see it here in the pendings, and we can see it in the solds that is definitely shot up. The pendings have definitely gone this way a little bit when we're looking at the existing home inventory. But again, I do not see, just because of what is going on with mortgage interest rates and most sellers not wanting to break out of their 3% interest rate to go into a higher interest rate somewhere else, they're going to kind of stay put until a lot of this still relatively balances itself out. So do I see a big swing in the inventory that we saw between April of 2022 to today? No, I don't. I see it more looking at what we see in this graph back in 2019, and that stabilization returning right here to the Treasure Valley. But overall, for existing homes here in Canyon County, we're sitting at 1.37 months worth of inventory. Briefly looking at new construction, again, we can see that the pendings definitely shot up from that. So did the solds. The solds are coming up, and our inventory is on the way up. But again, a lot of the builders have retreated back to their pre-solds. They do not have a lot of existing inventory that you can just go out there and buy. And that totally makes sense in the grand scheme of things if they're expecting things, to slow down massively, which they really did during the market correction. unavoidable. So now with new construction though on the way down and not a lot of available inventory, the question is that as existing homes start getting sucked up, which we can actually see, and if they don't really rise to levels to the demand, can we see the return of equity maybe come here to the Treasure Valley a lot quicker than usual? Well, the answer to that question is maybe, maybe not. We're just going to have to really see what the existing home inventory does overall as we start the stabilization trend and we see how the builders get back to work. But if the builders continue this pre-sold pattern and existing home inventory definitely gets sucked up, then can we see that return equity to be something probably pretty significant if the demand stays high? It could. It could very, very well. So we'll just have to continue to watch the data and see, but that could be a realization. All right, in Canyon County, now it's your turn to be able to talk about who was the biggest loser overall. Was it existing homes that affected the median home sales price here in Canyon County in the total single family homes, or was it new construction? And if we go ahead and take a look at this graph over here, we can actually see that we've been on the rise in existing homes over the last couple of months. We definitely had that bounce up from January, and we had another bounce up from February to March. And today, our median home sales price overall for existing homes is sitting at $380,000, which is up 25 grand from the month before, which puts us up actually since last month, 6.58%. It has definitely been on the rise. And you can take a look at that. If we're looking all the way back to January of 2022, when we're sitting at 390,000 overall, we're only down that 10% difference. So we are actually just down 2.56% now since January of 2022. Looking at the market correction though, when it's sitting at 425 down to the 380 that we have, we are still down 10.5% since then. And looking at new construction, again, a lot of the same trend that we saw over in Ada County, just not really as bad. But we see that we're sitting at $419,900 to the $409, so down $10,000 in the median home sales price that we had from the month prior, which in new construction puts us down 2.6%. And if we're looking at the total market since the market correction at 549 down to the 409, we are down a whole whopping 25.5%. So if we're looking at Ada County and we're looking at Canyon County, both new constructions have really taken the biggest shots in this market correction. But looking at the 465 that we had in January of 2022 to the 409, we are down 12.04%. So who is the biggest loser overall? Again, new construction is going to go ahead and take that cake here in Canyon County. Looking at the overall days on market, again, we're on the downward trend. And why? Because we're really getting back to the seasonal swing for real estate, which is generally from quarter two, quarter three. And we can see that it's heading back down. But like I said, with Ada County, are we going to expect to see the days on market be as low as we saw from like October of 2020 to 2021, right in the heart of the pandemic, when inventory levels were down to 6 days worth of inventory and the demand was super high, multiple offers, all of that? I do not see that returning. In fact, actually, I see more of a selective buyer out here considering the inventory that's available and that stabilization that's going. And we'll go ahead and we'll get to the concessions as we go down into buyer strategies a little bit further on in this video, so please stay tuned. And lastly, looking at the cancels and expires for Canyon County, again, the same trend as Ada County, where the cancels definitely made a jump up. And why do I think that they made a jump up? Again, it's because the mortgage interest rates also made a jump up from there about the beginning of February, mid-February, for a couple of weeks there into March when they hit into the sevens. So I think it just was able to bump out some of the buyers that were available out there when those interest rates got up there to maybe make this fall out of contract. But I do anticipate that number to go down in future readings as we see the mortgage interest rates come down with it. So now let's go ahead and cover a couple of the big elephants in the room that we've been seeing in the media as of late. One of the biggest ones is definitely what happened with Silicon Valley Bank and Signature Bank and even the Swiss Bank over there. Depositors ran on their banks. And why did they run on their banks? Well, it's because really, if we're focusing on Silicon Valley Bank in particular, it's because they made really, poor investments. But you really can't blame that investment too much on when the time that they did it. But unfortunately, what Silicon Valley Bank did was they invested a lot and heavily into the treasury markets. And as we know as of late, the treasury markets have definitely been making a loss, which is raising the yields, which reflects in mortgage interest rates. And what ended up happening is when a lot of those bonds started, basically the yields going up, them losing their values, they went in to make a big sale of those and sell them off, which was going to be at a loss. So because of that, a lot of the depositors got scared, ran in, got their money out of the bank, and created a panic enough for the Fed to be able to lock their bank and make adjustments before another big run could have happened the day after. But as always in the back end, even after this was locked, they ended up bailing them out, basically buying their treasuries at par, which they're going to go ahead and give back in the end. But it created this panic that is filtered down to a lot of imagination too, as to whether this is going to create another 2008, when the last time people really kind of ran on their banks. And do I see a 2008 coming back to foreclosures, all that, people really panicked, etc.? No, I've said that in multiple videos. I don't. Why? Because I don't think this recession, when it actually sees itself and sees the effects filter through, is going to be terribly bad this time through, because again, the jobs is one thing that the Fed really cannot seem to affect right now with their blunt instrument, which is the federal funds rate. Right now, there are still 2-to-1 jobs when it comes to employees willing to fill them. And that's going to kind of, in my opinion, keep people afloat as it comes along. And do I see other banks failing because of this? Well, there are other banks that are being really watchfully looked at by the Fed right now. So we'll just have to continue to wait and see what's going on with that. But you could see the response of the Fed, which I got to give them a little bit of credit for. They did respond relatively well to what was going on. And as we can see, they were just willing to print more money to bail them out. And we all know that printing money is not a good thing. But the biggest elephant in the room that I really want to cover is not so much the banks, which kind of seems to be over at this point. What I want to cover is the U.S. losing its reserve status to the world as the primary currency, or primary reserve currency, shall I say. What would happen to the United States if that really got taken over? Well, that's not an answer I think any of us really want to find out. Currently, with inflation being as high as it is and the overall coupon rates that are happening to our treasuries, for example, a lot of investors are kind of running from that because they're really taking losses. And I've covered that in many other videos, but there's a lot of investors around the world that are shaken in the actual stability of the U.S. Treasuries sector or securities. Plus, on top of that, the sanctions that we have gone ahead and put on Russia also really put a lot of fear into other countries as what's going to happen. Because if somebody in, say, Russia, for example, was invested heavily into U.S. Treasury securities, then we put those freezes on them, which was like, wait a minute, you just took my money away. So it really rocked the confidence of what was going on overall in that security across even now the world. And now we have China going in there and brokering deals for their yuan with other countries to be able to say, hey, we can take care of this. We're better off. We're not putting ourselves in the position that the United States is. Pure disaster, like they saw in Germany prior to World War II. Our currency literally could be worth nothing, and it could be those scenes that we saw with currency just lying in the streets, or taking 30 pounds of currency to go ahead and wheelbarrow down to your local store in order to buy a loaf of bread. So given where inflation is at, even though it's coming down, we would like to see inflation come down a lot more rapidly, and then maybe kind of end a lot of this that's going on around the world and try and broker a deal between what's going on between Russia and Ukraine. Let's all pray for that. Real quick though, before we move on to the best strategies to be able to succeed in real estate right here in the Treasure Valley, let's go ahead and let's just cover one little last thing, and let's take a look at the 1980s. During the 1980s, we did have super high inflation, as we all know. And then, of course, the Shah was overrun by the Ayatollah out there in Iran. We had gas shortages all over the place. The U.S. placed sanctions over there too as well. And we were able to make it through the 80s, even as the primary reserve currency of the world. And even though we were locked up in the Cold War, etc. With China and Russia, though, coming together, and maybe other countries already now starting to get off of that, like Syria, for example, going over and starting to use the yuan, India retreating back to their currency as their currency of the world. Is this time a little bit different than it was in the 1980s? Yes, it is. So really, everybody, the one key thing that I definitely recommend that you do is keep your eye on what is happening with the primary reserve currency and our status as that here in the United States. Okay, well, we made it to the end of the video here, and let's go ahead and get into my final thoughts and the best strategies to go ahead and succeed in buying, selling, and investing in real estate right here in the Treasure Valley. So buyers, let's go ahead and start off with you. Buyers, as we can see, stabilization is definitely returned right here to the Treasure Valley. So what does that mean? That means that if you're waiting for a better deal on your house to come around the corner, that prices are still going to dramatically drop, like we have seen since late May, early June to today. Those days are basically about over. And what has also happened with that is that a lot of the concessions that builders were willing to offer you and even sellers were willing to offer to you in the existing home market are now coming off the table, as is the negotiation power that you really had. So in essence, your buyer's window is essentially closed in the buyer's market. But there still seems to be enough inventory out there to where it is not a pandemic time that we saw when inventory was so low and the demand was so high that we ran into multiple offer situations with everything that you were looking at. But if you are looking at homes and you can go ahead and track this and kind of take a look and see what's happening here in our markets, which I do, you could see that anything 500,000 and under is starting to return to that multiple offer situation again. So in essence, buyers, has that window passed you by to be able to get basically whatever you want from the seller? Yes, it most definitely has. And have we returned back to that stabilization to more of an even playing field as of right now here in the Treasure Valley? Yes, we also have. But buyers, if the existing inventory is definitely going to sweep down, say any further for any particular reason, and the buyers actually demand catches up and really starts intermingling with that, we could start seeing to where equity values can start to be on the rise, especially if demand starts overpassing the amount of inventory that's there. Now, I don't anticipate that. Again, I anticipate if you look back at Ada County and Canyon County graphs, are we going to see everything kind of intermingle and really look like it did back in 2019 when things were actually stable? I see that being our new direction for some time. All right, sellers, it is your turn. Sellers, that is great news. If you're just listening to the buyer section, we have returned to stabilization. So those days of equity bleeding are absolutely over. But you're probably saying to yourself, well, I really don't have to move right now. I'm locked in at 3%. Why would I go ahead and make a lateral move over to a 5% or possibly even 6% rate? Well, that is actually a very true story. Why would you? Really, right now, as I've mentioned before, is ushered in the days of selling for necessity. So if you got to more or less move because your job moved or you have to move because of family, that's more than likely going to be the situation as to why you're doing what you're doing. But if you do find yourself in that situation to where you need to move because of necessity, or maybe you actually move just because you want to, of course, still key to today's market is appropriately pricing your home for sale, even in maybe certain situations to where you have a lot of competition around you. Maybe even a concession is still considered something in order to be able to go ahead and sell your home. Even though we're returning to stabilization, the buyers still kind of have it in their mind that they have the power, and in some cases, depending on really your location, they really could. So either way, it is key to be able to come up with the best strategy to be able to sell your home for the most money possible and in the quickest time possible. And of course, if you'd like to discuss that with me, would love to set up about 15 to 30 minutes with you to be able to go ahead and discuss that best strategy to get your home sold in today's market. All right, investors, your turn. Again, just like the buyers and sellers, both keys, you were returning back to stabilization. So if you are out there still waiting for prices to keep rocking down here in the Treasure Valley, I really don't see that happening in any kind of a significant deal. So prices are going to be probably stabilized here for quite some time before they actually start probably going on their way up. But the one thing that you're racing the clock on is the FHFA. Okay, we can see that the rents and the OER are starting to come down. And as the rents are coming down, as inflation is starting to cool, you can see that your capitalization rate is also going to adjust on the downward aspect. And of course, if you're out here buying for cash, of course, cash is king. And if you do own it, that's going to be the best capitalization rate that you can get. But if you are coming out here with a loan, this is where you really start to need running and crunching your numbers and figuring out what is the best strategy if you're having a secondary home. So remember, if you are doing a secondary home, your interest rate is going to be a little bit higher just because it's a secondary loan. But if you are looking for me to crunch those numbers for you and you have some properties in mind, please feel free to reach out to me, who would be more than happy to go over those numbers with you and again, come up with the best strategy in order to get you the investment properties that you're looking for right here in the Treasure Valley. And if we are looking at vacancy rates too as well, the Treasure Valley here, especially the greater Boise, Idaho area, is still a very, very popular place that people want to move to be able to find a rental property most times before they decide to buy. All right, lastly, renters, it's your turn. And as I always say with every single one of these videos, you are paying 100% interest rate on your house. Why? Because you're not the one getting any kind of equity that's going on here. You are paying your landlord, as you know. But the one thing, if you're looking at the FHFA and you're looking at what the Fed's looking at and the OER overall, we can definitely see that the rents are starting to tick the other direction, which is what the Fed wants when it comes to their blunt sword with the federal funds rate. So it's coming down in your direction. And if you are continuing to plan on renting, maybe that's a good thing to be able to bring up to your landlord the next time your lease renews and say like, hey, what's going on here? And try and negotiate. But is that going to happen for you? Can't guarantee that. That's between you and your landlord. But either way, if you really put yourself in a prime position or you are in that prime position to be able to buy nowadays in today's market, that is also a good thing. We're not there yet to where we're really kind of seeing these crazy multiple offers return. We're seeing the stabilization. Have you kind of lost, if you go back to the buyers section, any chances really of getting good concessions and powerful negotiations like you had before just a little few months back? Yes. But if you are looking to buy, I still say that now is a key time. If you're thinking that prices are going to come down much, much further, they're just not according to the data. So today would be a great day to be able to sit down with a mortgage professional and be able to go through the best foundation to get you into a home into the very near future. And if you are looking for mortgage professionals around the Treasure Valley to set that foundation for you, please feel free to reach out to me. Be more than honored to get everything rolling for you and to represent you in that transaction. Well, briefly again, everybody, thank you for taking the time out of your day to watch this video. I know it is kind of lengthy. I do apologize, but it does include a lot of information that you're going to want to know and things to keep your eye on, as we can say, and the best strategies to be able to go ahead and succeed in real estate right here in the Treasure Valley. And of course, if you are looking to buy, sell, or invest, or looking for that perfect game plan, please feel free to reach out to me. Give me a call, shoot me a text, send me an email. Also, please give me a thumbs up on this video if you do like the content, or please feel free to comment below too. Would love to hear your thoughts on what you think might happen in real estate coming up here in the Treasure Valley or anywhere else across the United States. And of course, I look forward to hearing from you. Please hit that subscribe button, hit the notification bell so that you're constantly in tune. Look forward to that day. God bless. Until the next video. Thank you so much. Bye-bye.